Welcome back to Explain the Charts, everyone. Today, July 28th, 2025, all eyes are on Ethereum, and for good reason. The news coming out is nothing short of explosive. We're seeing reports that ETH has just surged past the $3,900 mark, a level many were eyeing as a critical resistance. This latest move is reportedly fueled by massive U.S. spot Ethereum ETF inflows, totaling over $1.8 billion last week alone, significantly outpacing Bitcoin ETF inflows. BlackRock's CIO is even urging the Fed to cut rates, a macroeconomic sentiment that traditionally bodes well for risk assets like cryptocurrencies. News outlets are touting Ethereum as poised to lead the next crypto bull run, with some even speculating a target of $9,000. On-chain metrics are also chiming in, showing increased whale accumulation and rising retail interest, all pointing to a highly bullish sentiment. This widespread positive sentiment and institutional adoption are key drivers behind Ethereum's recent strength. Now, let's turn our attention to the charts to see what the price action has been telling us. It's important to note a slight lag in our detailed chart data compared to the very latest real-time news of ETH hitting $3,900 today, July 28th. However, the patterns and levels leading up to this surge are incredibly insightful. Looking at the one-day chart for ETHUSD, we can observe the broader trends over the past year. After a significant peak around $3,975 in May 2024 and another around $4,000 in early December 2024, Ethereum experienced notable pullbacks. One major reversal point we can spot is the sharp drop in April 2025, which saw price plummet to around the $1,400 to $1,500 region. This area has since acted as a strong long-term support, with price rebounding impressively from there. Following this, Ethereum has been in a clear uptrend, marked by higher lows and consistent attempts to break previous resistance levels. The candles in May 2025 show significant bullish momentum, with a large green candle on May 8th indicating strong buying interest around $1,800 to $2,200. This was followed by further gains pushing ETH past $2,500 and then $2,800, validating the renewed bullish sentiment after the April dip. The period from mid-July 2025, just before the latest news, shows ETH consolidating around the $3,000 to $3,500 range, patiently building momentum. The sustained climb from the April lows aligns perfectly with the overarching narrative of increased institutional adoption and the anticipation of spot Ethereum ETFs. This macro-level bullish structure on the daily chart provides a strong foundation for the recent surge mentioned in the news, indicating that fundamental shifts are driving this price action. Switching over to the one-hour chart, we can examine the more immediate price action, specifically a powerful rally in early July 2025. Focusing on the period between July 7th and July 10th, we see a dramatic move. The price broke out from a consolidation around $2,500, pushing aggressively upwards. On July 8th, Ethereum saw a steady increase from around $2,540 to $2,615. This upward momentum continued strongly into July 9th, where ETH broke above $2,700. By July 10th, a significant hourly candle propelled the price from approximately $2,820 to nearly $3,000, showcasing intense short-term buying pressure and volume. This short-term rally on the one-hour chart highlights how rapidly price can move when market catalysts are present. The strong volume accompanying these bullish candles suggests genuine buying interest, not just speculative FOMO. Observing these earlier short-term bursts helps us understand the velocity and potential magnitude of the current rally to $3,900, even if our chart here doesn't show it yet. Key support during this rally was established around $2,750, with resistance initially at $2,800 before the decisive break towards $3,000. These levels are crucial for understanding potential pullbacks and reaccumulation zones in future short-term movements. Now, let's zoom in even further to the 15-minute chart, covering a period from July 23rd to July 26th. This time frame reveals the finer details of market volatility and intraday trading opportunities just days before today's major news. Around July 23rd at 12:05 Universal Time Coordinated, ETH was trading near $3,679, showing some consolidation. However, later on July 23rd, from approximately 13:35 Universal Time Coordinated, we see a noticeable dip from $3,658 down to $3,580, followed by a slight recovery, indicating intraday volatility and areas where buyers stepped in. This mini downtrend on July 23rd was met with subsequent buying pressure, attempting to push the price back up towards the $3,650 region. We can see repeated attempts to hold support around $3,550 to $3,590 during this period. These short-term charts confirm the underlying strength even amidst minor corrections, as dips are often bought up quickly. For traders, spotting these intraday support and resistance zones is critical for setting entry and exit points, managing risk, and understanding the immediate market sentiment. So, what does this all mean for ETHUSD going forward? For a bullish outlook, the confluence of strong ETF inflows, significant institutional interest, and positive macroeconomic signals is a powerful cocktail. The fact that ETH is outperforming Bitcoin and targeting the psychological $4,000 level, with some analysts even suggesting $9,000, paints a very optimistic picture. A confirmed break and sustained hold above $4,000, especially with high volume, would likely trigger a strong parabolic rally, similar to past crypto bull runs. This could accelerate if the Fed cuts rates and further regulatory clarity emerges from the July 30th U.S. crypto rules. However, we must also consider potential bearish scenarios or points of caution. The $4,200 level is highlighted as a critical technical and psychological resistance. Failure to break past it decisively could lead to a significant pullback. Profit-taking after such a rapid ascent is always a risk, and we've seen historical instances where ETH experienced sharp corrections after hitting new highs. Regulatory developments on July 30th could introduce unexpected volatility, depending on their nature. For short-term trading, watch for strong volume accompanying any breakouts above $3,900 to $4,000. If price pulls back, consider prior resistance levels like $3,700 to $3,800, or even $3,500 to $3,600 as potential reentry points if they hold as new support. For long-term investors, accumulating on significant dips, especially near established support zones around $3,000 to $3,100, could be strategic. Always keep an eye on Bitcoin's performance, as it often influences the broader crypto market, and monitor ongoing ETF news and on-chain metrics like whale movements and network adoption. In recap, the immediate future for ETHUSD hinges on its ability to decisively breach and hold above the key $4,000 level. A move towards $4,200 looks highly likely in the short term, reinforced by the unprecedented ETF inflows and strong bullish sentiment. The longer-term outlook up to $9,000 is plausible, but contingent on continued institutional adoption and favorable regulatory environments, which the upcoming July 30th rules could clarify. Traders should monitor volume closely on breakouts and identify retest levels around $3,700 to $3,800 for strategic entries. Remember, market volatility is inherent and no outcome is guaranteed, so always conduct your own research and manage your risk. That's all for today from Explain the Charts. Stay tuned for our next update.